Good afternoon, everybody. Welcome to Trader Merlin Show for an exciting Wednesday edition, given all the CPI numbers and all the expectations from the Fed and pundits on TV yelling and screaming about where they think the market's going to go. We'll start things off at a little bit of a higher level today. It is the 12th of April today. It's, of course, Wednesday, as I mentioned. And I talked with Larry Jacobson about a week or so ago, and he says, I'd love to come on and talk about the principles of trading. Sometimes we get very specific on markets. Other times we stay very high level. And from my experience and from Larry's, I believe, the real secret sauce to trading and investing is making sure that you've got the good foundation, et cetera, and understand all the rules as they pertain to you. So AI generated this wonderful picture of Larry, and he's got a tie on. I think I've seen him on it with a tie like once or twice in my life. We're talking trading principles with Dr. Larry Jacobson. Larry, how you doing, my friend?
Good, Merlin. I really want to thank you for the curly cue that usually Superman has, so I really appreciate that.
Well, you are a superhero, so I wanted to, to make you look like a superhero as well. What's been going on with you?
Nothing, just been busy working on some new content, some new things for the students. And it was kind of fascinating that I went ahead and I started to read a book that I want to share with everybody, because I always do a lot of reading. Like you, I'm on documentaries all the time. I'm always looking behind just to see if I can pick up some new nuggets from other people. And I've had this book on my reading list for a while, and I just started reading it last week. And I'm like, oh my God, I got to share this with people. It's a great book. So hopefully some of your readers are going to want to read it as well.
Well, you cliffhangered us. What book are we alluding to?
Okay, you want me to take over sharing?
Go for it. You feel free to do whatever you like, Larry.
All right, I appreciate that.
You even put a nice collared shirt on for us today.
I did. Let me bring up the slide deck here, and we'll get going. Can you see my screen?
Yep, there you go.
Okay, beautiful. So the book is Principles by Ray Dalio.
Okay.
So just a little background. I'm going to move myself out of the way so that I am not blocking anything. People may not know who Ray Dalio is. He's an American billionaire, investor, hedge fund manager. He also co-started one of the largest hedge funds called Bridgewater Associates. And so when someone's willing to go out there, share their principles and how they became who they are, it really fascinates me. So I thought I'd kick off by just kind of sharing 4 principles that he shares in the book. Now, there are many different titles. He does one on trading and economics. I suggest starting off with principles. I always like to know how someone gets to where they become. And what Ray does is he really shares the good, the bad, and the ugly about his career. And so there were 4 principles that he shared right in the very beginning that I thought I'd share with the audience here. And then I'll kind of take that into trading. So the first one is, the principles you choose need to be clear and authentic, reflecting your true character and values. So this is a tough one for many people, right? Especially if you're a people pleaser, because you're always trying to do things to please somebody else. And that's why we tend to get very frustrated at times, or we feel let down because we're going off of expectations that may not be real. So he really hammers the fact that it took him time to realize that it comes down to be true to yourself and walk the walk. The second one I liked was, the key to success is knowing how to strive for a lot and fail well. So, of course, I got to give the definition of what failing well means. It's being able to experience painful failures that provide big learnings without failing badly enough to get knocked out of the game. So I thought this was perfect for trading, because we all know that in the beginning, we're all trying to learn. And the only way we're going to get better at trading is by failing a lot, which we don't want to do with a live account. But there's no reason we're not putting the time in right now when it comes to talking about, practice.
Yeah, and I think most people, when it comes to failing, they don't want to do it. Nobody signs up for a class at OTA or some other school or puts on an account at E-Trade hoping to make some money and thinking, I'm opening this account because I'm going to lose money, right? No one walks in it with that mindset. But I emphasize it with everybody that watches this program that if you focus on how much money you're going to make, you'll actually forget about losing, and next thing you know, you lose all your account and you blow it up. So I like this point from Dalio. This is one that's perfect for my experience as well. Is you've got to do everything in your power to preserve your capital and make sure that you stay alive long enough. And quite often, I see too many people finally get it and understand trading, but all of a sudden they're like, I have no more money left because I did stupid things, I didn't use stop losses, and I'm knocked out of the game. So love number 2.
Yeah, absolutely. And you know what? For me personally, I learned that one in business school because I had a very tough strategy professor and I actually loved him. A lot of people avoided him because he was too hard. Those are the kind of teachers I love to have because I know I will fail, but I will learn a tremendous amount of lessons. And sure enough, that's exactly what happened. And if I hadn't have failed, I never would have learned half as much had I just won the simulation. So those little lessons there, people look at it as devastating. I look at it as very positive. And in fact, if you read the book, you will actually see that Ray went broke. He almost lost the entire company at one point, and he had to start right from scratch again. So that's what I love about reading this book. The third point is to be a trader or entrepreneur, one has to be an independent thinker who correctly bets against the consensus, which means being painfully wrong a large amount. Now, he tempers it with the fourth one, which we can appreciate, which says, therefore, you have to balance the fear of being wrong and figure out an approach to decision making that would maximize the odds of being right. So, as you know, we teach the students risk reward management because you're going to have losing trades. And I think this is important for any aspect of your life, not just trading, is that fear is so powerful to some people that it becomes either debilitating or they're just afraid to take that next step. If you can shift your mindset that failure is a stepping stone to where you want to go, you can kind of handle that a little bit better. So I'm going to kind of base my principles after having started this book. And again, hopefully some of you are going to go ahead and read this book. I highly recommend it. I've been really enjoying it. And he goes through his personal principles, which I think many of us can go ahead and learn. So what are my principles?
Hold on. Before you jump on there,
Yep.
I want to look at your number 3. Because as a good comment here from, where was it? It disappeared. So point number 3 was one of the hardest there. Margaret says 3 is hard. Point number 3 is to be a trader or entrepreneur, one has to be independent thinking who correctly bets against the consensus, which means being painfully wrong a large amount of time. I agree with Margaret. How do you educate or convince people that you want to go against the consensus? You want to be the anti-Kramer, if you will.
Well, great question. I'm actually going to give you an example of that. Okay. And it was actually a quote. So I actually have that built in. So yes, one of my principles, number 2, actually addresses this. And you have to be willing to be wrong in order to be right. In fact, what really got Ray in trouble was back around the 80s, he actually went on Louis Rukeyser and announced that there was going to be another depression. He was convinced that we were going into another depression, and he was completely wrong. And so imagine you being so hard-headed that this is exactly what was going to happen, and it doesn't. Well, how do you come back from that when you're going out to the world with a thesis and then all of a sudden it goes completely wrong? But he was committed and he had his reasons for it and he learned a lesson from it. And I think that helped him become a little bit better at what he did next. But great question. I agree. I don't always see them in real time, but this is why I'll kind of go through it. And please, Merlin, like you've been doing, interrupt me. No problem with that. You're seeing the questions in real time. I got a little bit of a delay. Okay. So here's kind of my trading principles. And I'm going to give you all an example. Okay. An example of this. Okay. So my first principle basically says never blindly trade. And what I mean by that is you have to educate yourself. There's no way that you can just watch a YouTube video, read a book, and all of a sudden decide tomorrow, I'm going to start trading this live and have great success. Now, I once heard a statement and it became a really good mantra for me, which is do what Wall Street does, not what they say. And so what I always find, and this has been my personality, I believe it's yours too, Merlin, you'll do the same thing that I did. But several years ago, you know this story, but maybe the listeners don't. Maybe I've shared it with some of you, not sure. But there was an opportunity for me to fly to Atlanta, Georgia. And I have been a big Buffett follower since the time I started to learn how to trade, which was the mid-90s. And I always respected his rules. I respected his discipline. But there were some missing pieces that I wanted to understand, or more importantly, the infamous question that all traders at some point will ask, am I doing this right? Mm-hmm. And so I flew to Atlanta, 3 days. I had to pay for a plane ticket, 3 days of hotel, and I had to pay this gentleman to teach me, to confirm what I knew. Best 3 days of my life. It answered all the questions that I had regarding what my theory and thought was. And more importantly, it created a relationship with this person that I still, if I needed to, could reach out and talk to. And that to me is far more valuable to me than any money that I would have spent to do it. And when you get these opportunities in your life, okay, and you don't take them, then you can't sit there and do the woe's me in the corner, because there will always be something that's very important, a great opportunity. However, you don't always work toward getting that, because the fear of money will always stand in the way of the opportunities of what money can afford. So to me, I've never tried to trade blindly, which is why I found myself an online trading academy at 2010. I knew I was doing something wrong. I wanted to learn how to play golf, so I got myself a coach. And so I want to share, there's one thing, especially that happened today, that I think everyone is probably talking about. You kind of alluded to it, so I'm going to bring my other slide deck over. Let's just quickly take a look at the CPI today. So here we have the CPI news that came out, and I like to look at 3 sources every single morning, and I'll explain to all of you how I do this. Maybe this is something you can incorporate, but usually a half an hour before the equity markets open, because I trade options, as many of you know, I'm very interested in knowing what happens overnight and what could affect the markets. Well, here's the actual headline that I got: U.S. futures bonds jump after March CPI report, market wraps. So the first thing I look at is, what is this report actually trying to go ahead and tell me? Okay. And as a result, if you see something positive in the headlines, I've come to learn that it's not about the news, it's about the clues. The news is trying to get an emotional response out of us. It's trying to get us to take action. The problem is, this is where the contrarian comes in. The normal retail trader is going to think, I should be buying right now. Why? They're telling me the futures market's jumping, bond market's jumping.
Inflation's under control, man. We're out of the woods. It's glory days, right?
Exactly. And as a result, if you look over to the far right, you will actually see what happened this morning. So I'm going to take you into Econo Day in a moment. I'm going to show you how I use it each report. But at 8:30 a.m. Eastern time, we had the announcement. First thing you'll see here is that the news did show that we were lower than the prior month. Now, does that mean good or bad? It's still yet to be seen. But again, remember, they're looking for inflation to get down to around 2%. We're still sitting at around 5%. Now, how do I get myself prepared? One, I always have Bloomberg open. I'll show you where I go. I go to Econo Day to confirm, and then I have all these apps on my phone. I don't care who pings me first. I use these alerts as a means of saying there could be an opportunity, but not what the news is saying. So the next obvious place that all of you should be going to is the futures market. And notice I have a screen on my platform every morning that has the 4 major indexes in the futures market. This is as you can see, the June contracts in 5-minute mode. And sure enough, boom. If you just looked at all 4 of them, they're all doing the same thing. They all rallied off this news, and then they all sold off, telling us what? The big banks weren't buying. They were waiting for price to rally up to where they wanted to sell, and then they started selling it off. And you could see this happen in all 4 indexes. So when I say it's not about the news, it's about the clues. The news created this big rally, or perceived rally. The clue was the rally happened so quick and fast. If I looked over to the left, we probably rallied right into waiting supply, where the banks and institutions were waiting to sell. And that gave me all I needed to know on what could potentially be happening in the equities market on the open. So real quickly, let me bring you to 2 websites, like I mentioned here. The first one, Bloomberg. And again, I like to do this every morning, about a half an hour before the equity market opens. Bloomberg is free. Do not subscribe to anything. Right here under the name Bloomberg, you see markets. I always like to left click on markets. I don't care about the major headlines. I care about what's happening. Okay. Now, all of a sudden, look at the headline now: stock bonds stuck in a range as inflation persists. Yet, didn't we just see over here, right? CPI report. Look how it jumps. So I'm hoping that I'm starting to show all of you the fact that you see very different what they say versus what they do. And therefore, when I see these kind of headlines right now, I want to go to the futures market and I want to see how the market is interpreting the news. Because really what the chart is just a big picture of psychology, right? When people are fearful, you see the markets go down. When people are greedy, the markets go up. And so we just have to temper that emotion in us and start to think more strategically. So this happens every morning, a half an hour before the market opens. The other tool that I use is econoday.com. Again, another free site. Please do not sign up for it. I come to US upcoming announcements, full view calendar, and I'm going to show you how I've learned to read this over the years. And I spent a lot of time studying news. So I'm going to go here to retail sales that are going to happen on Friday, right? The news is already out of the bag right now for CPI. Let's see if and what could happen. So I come in here, left click on retail sales. And when the report actually opens up, I'm going to show you that there's 3 pieces of information. Before I do that, why I like Econoday is you can come down below, read the definition. You can see the release schedule of the rest of the year's retail sales reports. But here's the most important piece of information. To me, it is not the consensus. It is not even the prior. It's the consensus range. Now, I'm going to ask your listeners, and you tell me how they chime in, Merlin. How many of you in the chat, give me a yes if you can see this consensus range? Put in a yes if you all can see it.
Might be a little tight. I'll read it for them, but a lot of people watch this on their phone. So
got it.
I can read it out. So like your retail sales was expected to be between negative 0.9.
I'm not even going there yet. Don't go there yet. Just can they see it?
Oh, yep.
Can
I got some yeses
it?
coming through. They can see it.
Good. Okay. So can everyone else on the planet. So this range has already
you
been.
got me, Larry.
Yeah. Well, I'm just saying this range has already been baked into the market already. The market is anticipating a negative 0.9 to 0.2 range on month over month retail sales. And then you get the revised number here, excluding vehicles, which is kind of silly, right? I always have a retail sales report that doesn't include vehicles or gas, etc. And here's the important thing. If the actual actually comes in within this range or close to the range, nothing's going to happen. Why? They've already banked that into the markets already. They're already expecting it either to go down by 0.9% or to go up positively by 0.2%. Then the second piece is going to be looking at, well, how much higher or lower was it from the prior month? So as soon as that actual comes off, that's where I flip gears here and I go into the futures charts and I see what the reaction was to the actual. So now we can come back to CPI and actually look at it. So can everybody see here? We pretty much stayed within the consensus range on all these numbers. There was no surprise whatsoever, right? It was a little bit lower, not great, either half a basis point or 1 point lower, but this is nowhere necessarily where the Fed wants inflation to be right now. So this is why we saw this kind of reaction in the markets. So coming back to principle number 1, hopefully I've done a good job of explaining, and Merlin, please feel free to share, because you always have great insight on this too, about that first principle of going ahead and saying, never blindly trade. Anything you want to add, Mr. Merlin?
There's always tons I'll add to it, but this show would be like a 4-hour show if we went into that length. I think that and he's looking at macro here. It's not a specific trade per se that he was looking at with that one. Is saying, look, going into the market in general, going blindly and knowing what was going to happen today, which is, part of the things I do on this show. Is at the end of the show, I'll tell you, here's the big stuff coming out tomorrow and earnings and economics calendar, just so you kind of know what's going on and you aren't blindly going into the next trading session. But what Larry's doing is taking it a whole nother level of complexity and saying, okay, let's break down that CPI. Let's look at that expected range, see where things are likely to fall, and then you can kind of potentially anticipate what the reaction might be if you get a number like you did today. Today's reaction, having a 5% year-over-year CPI number, which was better than the expectations. It was supposed to be 5.1. I didn't think we were going to get to 5.1. I thought it was 5.2 or 5.3. Came out at 5.0. So all of a sudden, the market's like, hallelujah, rejoicing. That is a very predictable reaction because now the markets believe that the Fed's going to backpedal going forward. And maybe they'll taper off. They'll start to stop raising rates, although the Fed funds futures did not change at all today. It's still going to be 25 basis points at that May 3rd meeting. But you understand that there's going to be that knee-jerk reaction. You got that big pop. And then the reality was, well, we're not out of the woods yet, as Larry just pointed out. We're still at 5% inflation. They targeted 2%, which means we still have a long way to go. And then the markets reacted to that accordingly. And you see, here's the NASDAQ 100. We did surge a little bit past that supply level that goes back to yesterday's high, but then just falling, ending right near the session low. So all in all, even with great news, not the best trading day, right? And never go blindly into a trade. Try to learn as much as you can about whatever trade it is that you're going to make, but make sure that you don't over-analyze things. A lot of time it was just way too much work to analyze so in depth, and then you find that you don't even make the trade because you missed it because you took too much analysis on there. Anyway, back to you, Larry.
Okay, thank you. So, number 2. Be greedy when others are fearful. Be fearful when others are greedy. This is one of the first lessons I ever learned from Warren Buffett, who I believe learned it from his teacher. Now, there's sayings that other people might have said it. I heard it first from Buffett. And really what that means, it is all about contrarian thinking. So that kind of addresses Ray's third principle. I know a couple of people are like, well, what exactly are we talking about here? Well, you have to be okay understanding when the general population all thinks they know something, that's the time that you want to do the opposite. So a great story, can't be confirmed, is what I heard, is that Joe Kennedy, the bootlegger, John F.K.'s dad, JFK's dad, basically sold off before the big crash of 29. He claims it was because his shoe shine person was giving him tips. So when your shoe shine person knows something in the market, it's time to get out. And he claims that's what got him out of the market. We probably know there are other things that we have no visibility to. So again, what's very important here is to remember that you cannot be emotional with your trading. You have to be willing to do the following. And I've heard this most of my trading life. Trade what you see, not what you think. Your mind is going to convince you of anything. You can see anything you want in those charts. You have to be comfortable enough being able to trade very strategically, not worried about being right or wrong, but doing the best you can to put on a trade where, whether it comes out profitable or not, you managed it properly. And so I'm going to give you an example of one. And this is something that I've been bringing up lately. I don't even know if Merlin has seen this one. Sorry, guys. I'm just looking for the slide deck here. And there it is. Great. Here it is. Last Christmas, maybe many of you remember the whole Southwest debacle, right? Well, taking into what I've said, this is kind of combining 1 and 2 of my principles. Number 1 was don't trade blindly. Well, here you have all this negative news. And they're saying that the shareholders are going to sue Southwest Airlines, that there's going to be millions of dollars that are going to be charged against Southwest, that the airline falls after being hit from the holiday meltdown. All these negative headlines are designed to do one thing and one thing only, to get you to sell. And sure enough, here it was. It sold off all the way into this beautiful area of demand. And therefore, as most people were selling, and this has happened to me several times. I'm bummed that I missed Johnson & Johnson a couple of weeks ago. They had one of those moments where it's been going back and forth on some type of a lawsuit. It wound up being settled. The stock popped, but I caught Boeing, I wanted to say Boeing, when they grounded the mock planes and everyone started to see the price fall, and that was the end of Boeing. No, it wasn't. And same thing could be said here with Southwest. You could have bought, and you can see here on December 30th, you could have bought 100 shares of Southwest Airlines at pretty much a price of $33.67 or $3,367. However, many of you know I'm an option trader. And so I looked at it very differently. Why? Because if I bought the stock 100 shares, I only would be controlling 100 shares of the stock. Instead, what I realized here is for the same cost of buying the stock, I could buy 10 call options at 32 and a half that basically would have came out to be $3,100, still cheaper than buying the stock. But what this does is it allows me to control 1,000 shares of stock, not simply 100. So sure enough, on January 12th, as I always like to say, it's not about the news, it's about the clues. It came back up to an area. I had a nice run, and you could have sold the stock and made $322. The option at the same target would have made $2,200. So this is why I love being contrarian and thinking when other people are all freaked out. And I didn't know this back in 2009, but if I could build that time machine and go back to March of 2009, knowing what I know today, Merlin, we'd be doing this show from my island.
Right? Yeah. Three things that don't exist, Larry. Shoulda, coulda, and woulda.
Oh, I know. 3 greatest traders in the world.
Yep.
But my whole premise has been to learn this well enough that the next correction or crash we have, you bet I'll be looking for those opportunities. And that's why I marry that with value investing. And it allows me to find stocks that truly are selling at a discount versus stocks that I called Lake Mead stocks, where they fall down and then all the garbage at the bottom of the lake starts to appear. So it's very important right now that even though it's doom and gloom in the markets, you have to think like a trader and look at things that basically could happen. And I know, Merlin, one that comes to mind, I know you're going to share, is the 2016 election. And you told me what you did, and that was a beautiful story that exonerated. It pretty much gives a great example of that as well.
Yeah, I mean, I just went against what the herd was thinking, and everyone said there's no chance that that Donald Trump was going to win the election, regardless of which way I thought the election was going to go. Everyone said there's no chance; it's a foregone conclusion that Hillary Clinton was going to win. They said an 84% chance, and I hedged it with a whole bunch of puts. I bought a ton of puts that day, or actually not puts. I sold a bunch of futures contracts and I bought put options, and ended up being a great trade. And that was very speculative. To tie into your discussion here today, you talked about Southwest and all the fear that they're going to get sued. We're in the midst of another event just like this right now, and that's with the banking stocks. A lot of these banking companies, horrible. As you guys know, people are thinking the banking stocks are going to go down more and more and more and more. They're saying, Warren Buffett was on the TV today saying, I'm getting out of my bank stocks. I saw someone mention that earlier. Hey, we're going to go down even more. Well, look, I'm long Bank of America. I'm long JP Morgan. I've been selling calls against those, even though you guys know my JP Morgan trade. I still have it open from a couple weeks ago. I sold a $32 puts. I was exercised at 32, and most people are thinking, oh, well, he's a loser right now. It's at 128.51. You're down, $3.49. I'm not, because for the last 3 weeks in a row, I've been selling it, collecting about $1.90 premium per week, which is almost 1.5% per week in premium on JP Morgan. And, if JP Morgan stays right here and just bobs sideways, great. If I'm selling the 132 calls, if that gets taken away from me when it moves up, great. So, sideways chop, I'm buying when people are fearful. I'm also selling puts on FRC, which, again, everyone says is going to go to zero. Look, they just got $30 billion. I'm okay owning FRC and taking a chance with that one. Of course, there's risk involved. Bank of America, another one I'm long on. Charles Schwab, another one I'm long on. And it's exactly what Larry's talking about. I'm being very greedy because these people are so fearful of these bank stocks right now that just got a massive bailout. Now, am I taking a huge risk? Yeah, I am. But again, it's not with all my portfolio. It's a portion of the portfolio, and they're calculated risks. And I think that I'm even doing two services here. Number one is I'm willing to own those bank stocks, but I'm also selling calls against the positions that I do own to lower my cost basis and generate even more income. So, yep, number two, I'm definitely greedy when others are fearful.
Absolutely. And it served me well. And especially if you're in value investing, this almost becomes a mantra. My third principle, which I always use, is timing is everything, so plan ahead. And it's amazing to me that people don't realize that mediocre input into something is going to result in mediocre outcomes. I wish I could say that you can put in a little amount of effort and everything's just going to work out very, very well. Example, look at sports as a great example, right? Michael Jordan became one of the greatest basketball players because it wasn't that he just knew the conventional foundations of how to do a shot or how to rebound. He put in the time necessary and the dedication and commitment to be the best. And that's got to be said for anything in life. And unless you're willing to put in that time, be very knowledgeable and be very applicable, it's not going to work. So you need a plan, especially when you're trading, so you can quickly identify what you do well and what you need to work on. So my little baseball analogy is so many new traders are so busy trying to hit home runs that I have to remind them that there's a lot of baseball players in the Hall of Fame who are in there for stealing bases and singles and doubles and RBIs too. So it's not just about hitting things over the wall and letting it ride. It's being very strategic. And one of the ways that we do that, another example here I'll bring up, and this is a great slide that I like to show all the time. It's in my trade plan class at Online Trading Academy. So if you're a student, you haven't taken it yet, I highly recommend that you do. But this really kind of spells out the true difference between why people are successful and why they're not. Most people live on this goal setting side. It's very easy to create goals. Maybe even you prioritize them. You might even say, I'm going to even take action, like I'll go to the gym 3 days a week. The problem is most people don't. It's this 5% group that actually executes on their goals, why they fail big or they succeed big. And it's all about implementing their goals, learning how to evaluate their goals, but more importantly, refining their goals. And this is why so many small business owners in their first year fail, because they spend so much time working in the business, they never work on the business. Same could be said for many traders. They spend so much time in the markets as opposed to learning how to time the markets. I don't need to be sitting in the markets 24/7 like in a retirement account, which is why our strategic investor class, when I took it as a student, changed my life. It taught me that I don't have to sit there and listen to the typical malarkey. I've been waiting to work that word in. Malarkey.
Nice job, malarkey.
That Wall Street wants us to believe by leaving our money alone in a failing market and just dollar cost averaging or hoping it's going to come back. The one question they never bothered to ask anybody is, what type of market will you need when you retire? I'm sure there are people out there that retired a year or two ago that aren't excited retiring in this type of a market that's going lower and inflation being so much more expensive. See, these are the things that if you didn't have a plan, you wouldn't know what to do. So I highly encourage some of you, especially if you're an OTA student, to take the trade plan class, all right, and learn how to properly goal set. But more importantly, understand there's more puzzle pieces than either how much you can lose or how much you can win. You've got to understand, what are you willing to lose in a trade? What is the maximum you're willing to lose in a trade? And then how much money do you need to be making in a trade? And any one of those three things could be a great filter to stopping you from just trading for the sake of trading. And that's where I see students get in trouble. They overtrade. They don't quite understand why it worked or didn't work. And it's very, very important to do so.
Let me add in here real quick. One thing that, and I know, Larry, you and I have talked about this in the past, is you have on that list, creating your goals, prioritizing your goals, and planning your action steps. So let me give you an example here of some of the lunacy that I have seen being an instructor for many, many years now, and I'm just working with thousands of different people. I will go around a room, let's say I'm teaching a class on the Trading Academy, and I'm going around the room and say, okay, what are your expectations? And I'll go around and everybody's saying thing, and here I get to Bob. Bob's over in the corner. I say, Bob, what are your expectations? I want to be making $50,000 a month. Oh, okay, wow. That's a pretty good number. Definitely achievable, but how much capital do you have in your account right now? I've got $10,000. Like, okay. First off, I mean this in the nicest way. You're a jackass if you think you're going to turn $10,000 into $50,000 a month. That is so unrealistic. So I don't care what you write down on your creating your goals. If this was Bob, create your goals, make $50,000 a month. Great. Prioritize it, figure out how to get there. But I think you should add a third or fourth bullet point here, which says, make sure that those goals are realistic expectations. If you take a $10,000 account and you go just the average S&P 500 returns over the course of the last 70 years, you're going to get between 8 and 10%. Let's make it easy and generous and give you 10%. That means that your $10,000 by the end of the year will have made you $1,000. So to Bob in the back of the room, who thinks he's getting 50 grand a month off of a $10,000 account,
You're an idiot, Bob. You better stop thinking like that. Be realistic with your goals and expectations, and maybe you'll achieve them. If not, you're not going to execute on them goals.
I don't know why I did that accent, but I'm glad you guys enjoyed that one.
I'll let you get the email on that one.
Yeah, I'll get it, I'm sure.
No, you're absolutely right. And when I do teach this in the context of trading, absolutely. It's one of the first things I will discuss is expectation setting, because I was stuck with that many, many, many years ago. I was sold on a product that made that kind of a claim. And then when I actually was studying with the instructor, who told you that? That's completely wrong. And then you feel that moment of, well, whoa, who do I believe at this point? But yeah, this is really something more than just even trading. This is more or less a life lesson here of why you might feel stuck, is that most people are basically, going ahead and just goal setting, but never executing. Fourth and final one here, my friend.
Do it. Ooh, good. Real quick before you read the fourth one, Ricardo has a really good one. I like this, Ricardo. I might have to pirate that one. He says, capital letters, SMART goals, specific, measurable, achievable, relevant, and time-bound. That's really good. Yep.
Absolutely. That's a great one.
Yeah, achievable, it would be the realistic part that I'm looking for in that. So awesome. Great. Thanks, Ricardo. That's good. All right, Larry, what do you got for 4?
Last one, honestly, is, am I doing this right? Practice makes permanent. It's amazing how many people want to learn something, but never want to put in the time to actually get good at it. And I wish that, again, that could be something that any of us could just do. But the reason why we're more open to doing something in the beginning with a job is because we got to eat. But once things go outside of necessity or urgency, it basically becomes an interest, maybe a hobby, but never becomes something that you follow through with. So I want to share with all of you my 3 C's. And Merlin, if you want to put it into the chat, you can. My first C, and this is the 3 C's for everything in your life. Number 1 is commitment. It will just remain a hobby unless you're willing to put the time in to make it a goal. There's no simple way around this. So some students and some traders out there, they will read every book on trading. They will watch every YouTube video. They'll watch videos till 3 a.m. But when I say, have you put on a trade in simulation yet? There's crickets. And I'm sorry, until you're willing to touch the computer, the mechanism, and actually put on a trade. And by the way, the hard part of it is nobody wants to fail. Nobody wants to feel like they're not getting it. But that's where we all started off. And Zig Ziglar has an amazing quote. You don't have to be great to start, but you have to start to be great. And unless you're willing to put yourself out there in simulation where there is no risk, right? It's not real money. It's like when you all used to play Monopoly, you've got to put the time in. And I tell people, it doesn't have to be hours. In fact, if you can put in 1 hour a day, and if you're not computer savvy yet, that's where I would tell you to start. Start with getting comfortable on your trading platform so you can maneuver quickly around the charts or whatever other tools on that platform you need to execute and measure your accounts. So it really comes down to tracking, logging, and refining those trades. The second thing is confidence. Okay, and you're not going to be able to gain confidence in your trading unless you go out there and you're willing to make mistakes. For me, I have a pretty long run rate. It's 6 months. If I learn a new strategy or I'm testing something out right now, I will spend a minimum of 6 months testing it. It comes down to 2 words. Ready? Validity and reliability. With validity, is there enough meat in their rules or something they're showing you? The worst thing I hate is when someone gives you a strategy that has 6 different indicators that have to all trigger before you can take a trade. That's ridiculous because 1, you'll never get it down. It's not really explaining timing. And some of them even contradict themselves. Like I said, I've been orphaned before I came to OTA and a lot of programs, and a lot of them, especially the ones you get in the mail, are garbage. Yep. Okay. So if they're indicator based, it usually is not going to be something you can just start doing without some testing. With reliability is how reliable is the strategy that you can consistently replicate the outcome over and over again. So one of the things, Merlin, I teach the focus class, Trading Weekly Options. Before I was ever going to introduce that class to our students, I had to go through those two tests, validity and reliability. And I don't know if there's anybody out there right now that has taken the class, and you're welcome to chime into the chat if you agree. One, the rules had to be valid. They had to be that any person in that class could follow these rules and understand it. And two, with some practice and time, you can replicate these outcomes, and that's where time is on your side. Don't feel you have to jump in on day one and start making money. That's the fastest way to lose money. So you've got to keep that thought process going and making sure the outcomes are what you expect.
And one thing for the confidence thing, since number 2 is confidence, one thing that will help some of you with your confidence is to not put pressure on yourselves to be making money. At the beginning, what happens is you put this unbelievable weight on your shoulders of, I have to make X amount of dollars per day in order to, survive or make a living, whatever you want to do from trading. I would say simply go back into a very, very small amount. Hell, trade $100 worth at a time. You don't have to pay any commission fees on stocks now from pretty much every broker. So go and trade one share. I know it sounds stupid. It's not about making money. It's about saying, okay, I've got this. I've got the execution done. I see how I'm supposed to hit these buttons. I'm not going to I made a mistake this morning, guys. I was trading from my phone from bed, and I made an options trade on FRC, and I hit the wrong button, and next thing you know, it cost me $175. No. That was like 3 minutes. Bad trade. And I'm someone who's very proficient with trading applications and platforms. So start with one share and then get your tactics down. Make sure you understand the platform. Make sure you understand the strategies that you're going to be implementing, and then try those things out. And if you can see that you start to generate some consistency, not necessarily making a ton of money, but you are consistently having successful trades, then you review those things. And that should start to boost your confidence. Now you go from 1 share to 10 shares to 100 shares, whatever it may be. But start slow and don't put the pressure on yourself. Otherwise, you will make stupid trades early on and you'll blow your account before you even know it.
Absolutely. And in fact, you kind of hit my third and final one, which is consistency. And how I define consistency is pretty similar to what you said. By tracking and logging your trading outcomes, you've got to learn how to become more consistent. In fact, this brings me back to one of Ray's principles, which is, I'm just reading it here, you have to balance the fear of being wrong and figure out an approach to decision-making that would maximize the odds of being right on a consistent basis. So one of the things I could say is, having read this book, it really put a lot of wind in my sails, because I realized I'm doing a lot of what Ray did. So it's making me feel a little bit better on my thought process. And here's the last piece I'll kind of share on consistency. It's not about how much you could make. It needs to be on how much you get to keep. And that's what a lot of novices or retail traders never understand. Every trade doesn't matter. What matters is that you're managing your account, you're not turning winners into losers, and you're figuring out quickly what you might be doing that may be causing these problems, and you quickly fix it. And again, it's not just in trading, it can be in life as well. And the more that you're willing to work on yourself and be open to it. And another thing Ray mentions all the time is, when he got really smart is when he started to listen to other people's opinions, even if he didn't agree with it, because if he lived in his own little box, he never would have come up with the ideas that he was able to do. So I love personally to see other people's styles. I try to morph it into my own, because you always want to trade the way you trade, not try to recreate somebody else's process. And if it doesn't work, like I said, I just either will keep the strategy and continue to build on it, or I will trash it and throw it away. So those are my 4 principles right here. They have done very, very well. Like Merlin, he doesn't like Apple. I hate Adobe. I will not trade Adobe, and I don't like BIOS. They're just too wicky and volatile for me. Other people love them. So you have to trade what you love, you feel comfortable with, and keep doing more of what you're good at, and let go of things that you're not so good at and focus on the good things.
One part I'll add to this is, it's kind of hard to believe this one, but I obviously have a German Shepherd who doesn't like the...
He doesn't like Bob's accent. I'll tell you, when I did Bob's accent, my German Shepherd done got up and left the room, which is kind of funny. But dogs are
like their owners. I go to the dog park quite regularly, and you see dogs that look just like their owners. There might be some really heavy, overweight guy, and he's got this bulldog. You got me with the big nose. I got a German Shepherd. You got the little lady with her perfect done-up hairdo, and she's got a little poodle with her. And it got so funny that there's actually a dog food ad. I'm going to share it with you right now. This picture just cracks me up, where it's like dogs and their owners, and you notice they kind of look like it. Well, I would argue that your trading plan is like your dog. Your trading plan is a reflection of you. So, you may watch some presentations that I've given in the past. I'm fairly high energy. I'm fairly quick. Trying to emulate my trading style is going to be very difficult for a lot of people. If you're slower on the keys, you don't quite get the trading terminology or chart reading, my strategy is not going to work for you. So you have to find out what works for you, even though you might like pieces of mine, of my style, or pieces of Larry's style, or any other guests you might have in the program. You learn from those people and take the pieces that you like, but also make sure you don't change fundamentally, or try to change fundamentally, who you are. I think if you keep your trading plan true to your personality type, it'll be a much more successful trading opportunity, as opposed to trying to mimic what somebody else is doing. So just a little bit of extra food for thought there on that one.
Perfect. And one thing I'll add, because somebody actually I saw in the chat mention this, FYI for OTA students, here it is. I just wanted to show you. You're welcome to take a look at it, and then I'm going to show you what I was going to do. These are the 4 roles that I came up with that I teach in the trade plan class. There are 4 distinct roles that you have to get very proficient in. You've got to be the entrepreneur who's setting the goals. You've got to be the good technician who can get through their platforms and really understand the mechanics of a trade. The executor is the manager. You're managing emotion. You're managing the rules of the trade. And then finally, the evaluator is your analyst, right? You're logging them, and with your goal setting side, you're going back to look things up. But what I wanted to share here is somebody asked on, Friday, April 21st, I'm going to be doing a bonus XLT option trading session where I'm going to share my 4 principles for trading options and how I apply them. So someone had mentioned that. I was going to save it for the end, but yes, I haven't had the time to get into the XLTs as much as I want, but this book has really inspired me, and I've been thinking about it. And so I'm going to actually break down an option trade into my 4 principles and show you how I apply those 4 principles.
Awesome.
So, yeah.
Damn, Larry, I was all excited. You did a nice little run through here. So the 3 C's: commitment, confidence, and consistency. He's got his 4 rules that he's taken, I guess, modified based off his experiences, and using some of the comments from Dalio as well. Yeah, there we go. There's your graphics. You get those 4 trading principles. Number 1, never trade blindly. Number 2, be greedy when others are fearful, and be fearful when others are greedy, which is that going against the herd mentality, which is kind of the reason I'm looking at the those financial stocks right now. Again, a lot of risk out there, but I'm experienced enough to handle that risk. Principle number 3, timing is everything, so plan ahead. Yep, plan ahead, strategize, look for supply and demand zones and those high probability areas. And principle number 4, am I doing this right? Practice makes permanent. And I would say start slow. Don't press yourself to achieve huge lofty goals right away. Start off rather slow there. Let's see, Larry, would you please ask that the recording from 421 be saved for a month? Okay.
That you got to write into help@tradingacademy.com. I don't really have any power about how long a recording stays up. And so that's something that has to be requested. And then it goes through the committee, as Merlin will attest to.
Oh, yeah, that's it. All right, so there you go. There's your trading principles. Larry, what's on your schedule here? I know we've got people asking you, are you doing XLTs? Are you teaching options at OTA? Yes, you're teaching options at OTA. You do. Tell them what you're doing and where can they see you?
Basically, I am doing the focus class, like I mentioned, Trading Weekly Options. It kind of came about. A lot of students were asking me, how do you do your weekly options? I always go from a very conservative, safe place, especially when I'm dealing with students, because I can get very detailed and very fast, but that doesn't benefit new people. So we decided to take one of my strategies called Trading Weekly Options, and I teach that where there's an application session where students get to watch what I'm doing on a weekly basis, ask questions. And I'm scheduled, I believe it's full though, I'm scheduled to teach options in Irvine sometime in early May. Other than that, I am in the laboratory again, working on some new content. So I'm excited about that. And yeah, just typically working with instructors to keep them up to speed and hopefully giving you guys the best experience we can here at Online Trading Academy.
And you're not doing the stock XLT, right?
No, I've never done the stock XLT, so I don't know where stock has come from. Yeah.
But you do options XLT, right?
I did do the options XLT. I just haven't in a while. But I might come back in. It's really been timing because we have a lot of meetings, and during the day is usually when the XLTs are happening is when I'm on my meetings cadences.
Nice.
Yeah.
Well, awesome, Larry. Well, thank you. I know you're a busy man, and it's always fun to get you on these sessions. I'd like to get you on more frequently, but I know I got to fight with that schedule of yours, which is, if you look at his calendar, guys, it's just a solid block of boxes that take up every slot of time from sunrise to sundown. So thanks for coming on today, Larry. I really appreciate it.
Absolutely. And guys, I hope you like the book. If I find other books like that are really inspiring to me, I will share them. I just think this one really kind of hit me out of the gate where, wow, here's somebody that we all would love to be, and he's actually sharing how he did it and sharing why he succeeded and why he failed. That's gold. Merlin, great to see you. See you soon. Thank you, everybody.
See you, Larry.
Good
Thank
trading.
you. Take care. All right, guys, there's Larry Jacobson. Sorry, Dr. Larry Jacobson. He earned that title. I may as well give him some credit there. And he looks much better in person than he does with my artificial or AI animations here. Trading Principles, Dr. Larry Jacobson. Hope you guys learned something from that. Again, somewhat foundational, but I think that that's the critical pieces for us. As you can probably hear the jackhammer going on directly outside my window. They are tearing up the foundation for the house, which of course is the piece that's going to keep it all standing. So foundation is critical. Trading Principles, as Larry mentioned, there's kind of 4 key ones that he looks for. I would encourage all of you to just look introspectively and try to apply all of those to you and see where your strengths and your deficiencies are, and make sure you focus on those deficiencies and bring them up to snuff. If you want to know more information about Larry or any of the classes he's talking about, and for Josh out there, yeah, Skull, if you go to tradingacademy.com, you go right to the front page and they'll tell you more about any of the classes and offerings from Online Trading Academy where Larry is teaching some of his courses. So, all right. As time is short here, let me get my these earbuds out of my ear, and I got 7 minutes left. Good news is Big Eb is not here today to heckle me and try to get me to go an hour. Real quick, Dave, thank you for this comment. These are the ones that make you feel good. Obviously, I've got a lot of experience in trading and investing, and I know I can't help everybody, but I think in many cases I can look at what people are doing wrong because I've seen just about everything being done wrong over the course of my career, not just by myself, but other people, and offer solutions on how to fix it. And Dave says, Merlin, after our conversation, I started trading larger time frames with micros just to validate my plan. It really helped out, and my consistency is returning. That's awesome. I'm so glad to hear that, Dave. That's really good. I think that, going those bigger time frames, slowing it down a little bit. And then, once you find your groove, you can go back to different time frames, but find something that gets you that confidence, gets you your knowing your strategy is working, and then build on it from there. But good, I'm glad that's helping you out. Let's go into what happened out there today. Obviously, the markets with what happened with the CPI numbers were pretty, well, let's just say there was some volatility to speak of. So I'm going to start here at the bottom, work our way to the top. Here is your Bitcoin, which was down 1.32%. It was actually looking fine. Here's your 5 minute of it. Looking fine, and then all of a sudden you have this real big rip up, just like the equity markets. And, all you guys making comments recently about how Bitcoin seems to be tied to the NASDAQ, and I would agree. Picture looks almost the same. Here is the Bitcoin chart, which is down 1.32%. And let's see. Here is the NASDAQ. That picture looks almost identical. NASDAQ down 0.94% today. An abrupt about face. Let me show you the daily time frame here so we can see kind of where we're coming from. We were right back down to those lows that we achieved on last Thursday session, just before the Good Friday break. So going back to Thursday, April 6th, the low there on that day was 12,953, and today our low is 12,937. So not looking good for the NASDAQ 100. If it does continue to roll over, you're looking at a target down around that 12,750 mark would be where I would expect it to fall, which would be 200 points in current level, which would be almost 2% down. So we'll see if that does come to fruition. Russell 2000 down 0.75%. Similar picture. Still just feeling like it's traversing sideways for the better part of a month now, but down 0.75. S&P 500 having a long topping tail out there. And I wouldn't quite call this a shooting star because it's not at the top of an uptrend. It's just kind of sideways. But I think you can still trade it the same way. Right, you can trade that same way, and if we start to break the lows of today's trading session. I think there may be a nice shorting opportunity there. Top podium. Here's your Dow with the shooting star. Now, this is a good shooting star. Not only is it a shooting star, but it also broke through these highs, which you expect there to be some supply, which was eaten up, of course. That's an upper yellow box. I'll take this one away. Now what you're looking for tomorrow would be a break down below that. So if anybody's here trading the Dow tomorrow, you might want to look at that 33,761 mark for Dow futures as your potential short opportunity, looking good as a short. Gold, number 2, we actually get some positive territory here for gold. It does have a shooting star, but it's not at top of an uptrend. Had a long topping tail today. That's not very bullish, although it was a green candle at 0.29%. The trend's still looking decent. I did anticipate it selling off a little bit more, getting down to about this 1990 mark on gold, but the good news for anybody who's long gold, it looks like 2,000 held as a retracement pullback. And finally, best performer out there would be crude oil. It's outside the yellow box. It is broken, and man, I'm kicking myself for selling those calls on my USO. Oh well, at least I won't be losing any money, but I'm leaving money on the table. That's for damn sure. I was expecting there to be a sell-off, and this is why the markets are great, because some days I'm right, some days I'm wrong, and as you guys know, I was expecting this crude oil to start to fill this gap and sell off a little bit. Last 2 days have said, oh, did Merlin say it's going to close the gap? Well, let's rip it up and break it through those highs. Now you're seeing it rip to the upside, outside that upper supply zone. The only little thing stopping it is this tail that goes all the way back to December 1st of 2022. That's the topping tail there, which had a high price of $83.34. And today we hit that same number, $83.53, right now at $83.26. So it's looking great from a bullish perspective for crude oil. You got a breakout trade going, and who knows, that 92.70 mark, it doesn't seem so unachievable now that we've broken out. All right, I think that's going to do it. I'm keeping it under a 1 hour show. I do want to go and show you, by the way, I got a bunch of questions which I need to get answered. But here is the economic calendar for tomorrow. As you can see, we've got PPI numbers, and those PPI numbers are expected to be pretty good as well. Today's CPI, as Larry showed you, came out way better than expected. That was kind of surprising. The strange part here is they're actually expecting PPI numbers to rise. Well, given what happened with CPI numbers, you kind of think that this number is going to be lower than 0.2. Right, maybe getting back to zero, staying at 0, which would be great from an inflationary perspective. That's your core. You also have your PPI numbers are expected to be unchanged tomorrow. So those are the two big numbers. There will be the PPI number and the core PPI. You also have later on tonight a GDP number coming out for the UK. Yeah, I'm just testing my brain right now. I'm trying to remember off the top of my head. I'm pretty sure we have a GDP number coming out from the UK. You also have a rate statement from Canada, which came out this morning. That's stated 4.5%, and that is predominantly your big economic announcements for tomorrow. Now, you don't have any real major earnings yet. Again, Friday is where we'll hold off all our earnings announcements too. That's going to be the fun part. It will be on Friday when all the bank stocks report. All right, I think that's going to do it. I'm at a 59-minute show, so I'll wrap this one up again. If you like today's show, you learned something, that's awesome. Post your comments down below the YouTube video or any YouTube video, or you can email me at tradermerlin@gmail.com. Send in your topics, questions, comments, feedback. You can email me stuff there, and I'll get to all those questions on tomorrow's show. So thank you guys so much. Hope you enjoyed it. If you want to know more about Larry Jacobson and taking class with Larry, go to tradingacademy.com and see what they have to offer. He does the options program for OTA. Take care, everybody. I will see you tomorrow.